What up, everybody? Happy Wednesday. Welcome to the Finance Rebel Show. I am Kamari Ellis. Y'all know every Wednesday we do Wealthy Wednesdays where I answer your money questions live. And I don't know what's going on with my microphone, why it won't stay still. But as what we do every Wednesday, I answer your money questions live. I see we already got a super chat in the building. So thanks, DC, for the super chat as we get going and get started right away. So appreciate that. We are live on Instagram. We are live on Facebook. We are live on YouTube. Freshman One, how are you? How are you? How are you? And we are going to get to it, y'all. Listen, today we are talking about asset allocation, right? There's a lot of stuff going on in the world right now. Russia's in play. Oil's running up. Wheat ran up 7% today. Like, everything's crazy. Interest rates are about to go up. And I've been getting a lot of questions about what to do with my 401k plan. A lot of people are scared that they're going to lose their money. A lot of people are wondering should they contribute to their 401k in these trying times. And these are the questions I get often. So if you don't know who I am, if you don't know me from a can of paint, my name is Kamari Ellis. I'm a tax accountant, but in my former life, I was a former financial advisor, or what I like to say, a recovering financial advisor and a former portfolio manager. I've helped people start businesses, invest in their businesses, invest their money. Overall, I've helped people save money on taxes, the whole nine. There's not many things I have not seen or have not worked in when it comes to personal finance and small business. So with that being said, like I said, today I want to talk about asset allocation. What's up, Shelby? Fancy Ivory, Resilient Wealth. How are you? All right, Freshman Fresh. You are a graphic designer. All right, tell me, do something for me and send it over to me. Let's see if you're any good, Freshman. Just DM me. Bonafide Credit Repair. How are you? How are you? How are you? So today I want to talk about asset allocation, right? And what is asset allocation? Asset allocation basically is the mix of stocks, bonds, portfolios, international stocks, dividend stocks, preferred stocks that you have in your portfolio. Each one of them has their different characteristics, right? Now, before I even really get into this, I'm going to break this up into two parts. So tonight, I'm going to talk about kind of the basics of asset allocation, and then next Wednesday, I'm going to extend it and go a little bit deeper and talk about how college endowments like Yale and Harvard and Princeton, how they invest their money and how they look at asset allocation, right? In the hopes that you can take some of these lessons and you can apply it to your personal 401k, your personal portfolio, your IRA, your Roth IRA, so forth and so on, because everybody has been concerned about trying to find that one trick pony, right? That grand slam, that hot stock tip. But in actuality, it's not really about a hot stock tip. It's really about what your process is and what your overall asset allocation is. How much stocks do you have? How much bonds do you have? You all might have heard the term 60-40. That's pretty popular, where you might say a natural portfolio or an average portfolio might have 60% stocks in it and 40% bonds, typically because it will do well in any kind of environment. Now, that standard portfolio has gotten its butt kicked over the last several years. Very much so, because the stock market has been on the run for the last, 12, 13 years. So in 2009, that's when the bull market began. In 2022, this bull market is still going. So what's 2009 minus 2020, 2022? We're looking at like 13 years, something like that, something crazy. And so what happened is a lot of y'all got lulled to sleep. A lot of y'all think it's sweet. A lot of y'all think the stock market only goes up. And that is sad. Right, because it doesn't. You got to be prepared for your money in terms of the stock market or your portfolio to be able to weather all storms. And sometimes your money will be down, or you'll have a losing negative percentage, as we saw these last couple of weeks in the stock market because Russia and Ukraine. And sometimes your money will be up, 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 up because things are doing well. Corporations are making money. They are paying out earnings. They're paying out dividends to their companies and to their shareholders. So it can be really good. But again, people really got used to that. Like they got used to it being comfortable. I'm thinking of a movie of mine that I really like called Frank White, The King of New York. And there's a saying in there when he says, when I was away, you guys got fat. You guys got rich. Now I'm back. Right. So when I think about it, right, the bull market has been here. People have been getting fat. People are getting rich. But now the potential of a bear market's here, and a lot of people don't know what to do. And the bear market is coming for its due. As Frank White said, if a nickel bag is sold in the park, I want a piece. I can see the bull market saying exactly that, right? I want a piece. So now you're going to see a lot of weird stuff happening. You're going to see commodities running through the roof. Oil right now, bust to $110 today, right? Yesterday was $105. Today is $110. What's going to happen? Higher oil leads to higher gas. Higher oil, higher gas equals less money in your pocket, sadly, because the more money you're paying in gas, less money you got to spend and take your lady out, your boo thing out. Valentine's Day was just the other day, not too long ago. People are not going to have the same amount of money. So it's going to get a little touchy, especially the longer this war goes. So do me a favor, y'all. As we get through this, go ahead and throw your questions in the chat. And I will definitely get to them. This is going to be a short night. I got other taxes to do, right? So I can't stay all night. So I want to acknowledge DC. DC, I'll definitely get to this question as I talk about asset allocation a little bit deeper. Hey, Ms. Edith, how are you? And Lily Star, or is it Lily or Lila? Correct me if I'm wrong. I hate saying names wrong. Jose, what's up, brother? How are you? MD Tillman, how are you? Oh, it's Michael Dennis. All right. Did you got a new handle? All right. And Fancy Ivy is here in the building too. And Thamos is here. Boss Diva is here over in the IG world. Rain Park, what's up, Rain? Rain, you starting to become a regular, man. YWG NFT, how are you? And Bonafide Credit Repair. All right, everybody is in the building. All right, so like I was saying, asset allocation is really just how well you're able to put together different asset classes, right? So typically you have several asset classes. You have cash. Cash is the asset class. You have domestic stocks. You have domestic bonds. You have international stocks. You have international bonds, right? Then you also have alternatives. Also, you can throw real estate in the mix in terms of an asset allocation as well. Each one of these asset allocations, by the way, commodities and also currencies are asset classes as well. But each one of these asset allocations has a typical behavior or attribution or just kind of a way that it normally acts and goes through things. So you want to keep that in play. So when things are crazy, bonds, U.S. bonds, especially U.S. government bonds, are pretty good, relatively speaking, right? Before I get started, remember, this show is not investment advice, people. This is for entertainment and educational purposes only. These are not recommendations to buy or sell. If you want to buy or sell an investment, talk to your investment and or your tax advisor before you do so, all right? Past performance is not an indication of future results. I don't want y'all to forget that. That's very important. It's very important, all right? But each one of those asset classes has a different attribute, a different way of moving. As the weather changes, the asset allocation changes. Again, when we're looking at bonds, right? What they look at for the U.S. government bond or the what's the word I'm looking for the benchmark for bonds, they usually look at the 10-year U.S. Treasury. And if you look at the 10-year U.S. Treasury, it's actually increasing in price. yields have been, the yield has been going up, but it's starting to increase in price. So the yields have been going down. Let me back up, y'all. Over the last couple of months, the yield has been going up, right? So it has been making as much money. But now that Russia and Ukraine hit, yields have changed. They're starting to tighten up. They're starting to come down a little bit. So bonds, as yield prices go down, bonds increase in value. I don't want to get too technical and y'all don't put any of y'all to sleep, but that's just a characteristic of bonds. Now, there's different flavors of bonds inside of bonds. You have U.S. Treasury bonds, you have corporate bonds, you have junk bonds, right? There's all kind of bonds. And so you need to understand how each one of them act, how each one of them maneuver. The same thing for stocks. When things get a little crazy, stocks tend to get a little crazy as well, right? Yesterday, we saw all red across the board in the stock market. What happened today? Stock market jumped up almost 600%, according to the Dow. Lock and Key 11, how are you? Jones Elk, forgive me for saying your name wrong. Welcome. But all of that has just been crazy. They operate differently. So when you want to start putting together your portfolio, you want to say, well, right now is good, but there's always something on the rise. There's always something coming down the pike. I don't know what it's going to be. So do I want to put all my money in stocks? Do I want to put all my money in bonds? Right? Other factor in asset allocation, what I think is probably the most important factor in asset allocation is your time horizon, or what I like to call time horizon. Basically means how long before you need this money? Y'all hear me talk a lot about retirees pretty often, because retirees is like the ultimate time when people need to convert those savings that they've been saving in their 401ks and in their pension plans, and they need to change it over into a paycheck for themselves. And the money needs to be there in order for them to make sure their paycheck will be there to make the ends meet, right? So that's all of those things matter. So let me see here. Just look at something real quick. And also, like I said at the beginning of the show, interest rates, Chairman Powell said interest rates are going to go up. So guess what? Stocks are going to start to act a little bit different. Bonds are going to start to act a little bit different as rates go up. So I want to share this screen with you all real quick. By the way, if you're just now joining in, my name is Kamari Ellis. This is the Finance Rebel Show. If you don't know me from a can of paint, this show is dedicated to the Black community to help us all get a greater understanding and appreciation of money. All right, so give me 1 second. Let me take that off. And so I'm just looking here, right? I'm on CNBC.com. I'm looking at the U.S. 10-year bond, which is trading at 1.38%. Now, this is just an example of what I was talking about in terms of things changing. So we see here the rate has been going up over these last couple months. And remember when I said that when bond rates go up, they tend to go down in prices, right? Again, I won't get into all the technicalities of bonds because they get a little technical. But what happens again in times of chaos, in times of war, in times of geopolitical uncertainty, they tend to make money. Why? Because U.S. bonds are what's called safe haven assets, right? You have a couple of different things that are called safe haven assets, but for right now, we'll talk about bonds. Safe haven assets, people run to them where they feel there's no safety anywhere else, but they know they'll always get their money back when it comes to this asset. U.S. Treasury bonds are one of them, right? So right now, we're looking at this on February 25th, the U.S. Treasury bonds were yielding 1.98%, a little under 2%. Then March 1st, right over the weekend, we had all the Ukraine stuff. Then March 1st came, bond yields fell to 1.7%. Then they rose a little bit to 1.83%. But bonds now are starting to anticipate what's going on with this whole war, with this whole crisis. And again, people are running to them because what happens is when you see the interest rates go down, people are buying more bonds, U.S. Treasury bonds, right? When you see the yield go up a little bit higher, people are usually selling them. And then again, I don't want to get too technical on y'all, but I feel it coming. As the rate goes up a little bit, people are selling them, but the rate goes up to compensate to make the bonds a little bit more sexy and get people to get back into those bonds. But again, bonds have a season, they act a certain way. If we go to stock, we can look at stocks, and we'll look at stocks based on the S&P 500, which are the 500 largest companies in the United States. Most of them are multinational, meaning that they spread across multi countries or over multiple countries. But here, I'm just looking at it and just look at it year to date, right? So from January 1 to current day, stocks have been falling. So in January 1, and forgive me for everybody that is on the IG and listening in on the podcast or the replay, you can't see what's on the screen, but this is better experience if everybody goes to my YouTube channel, thefinancerebel.com. Just go to youtube.com, type in the Finance Rebel, and you can find the on-screen presentations over there. But it's important to illustrate this, right? Because at the beginning of the year here, the S&P 500 was at roughly $4,793. Today, the USP is $4,386, right? When you go to yesterday, the market closed at 4,306. Today was up about 80 points, almost 2%. So you'll have some fluctuations, but we are clearly down almost 10% year to date. The market is down, and the market is getting more pressure from Russia, from Ukraine. It's getting more pressure from interest rate hikes, right? There's been a lot of cheap money floating around out there. People have been able to buy homes. Home prices are through the roof right now, sadly. And a lot of people are trying to figure out where the heck they're going to live. But since there's easy money for people to get, people can just got a little bit of credit, can get a mortgage. And I get it. So, you got to factor in all these things when we start talking about your asset allocation. And I know it might sound a little overbearing, but it really isn't. And so for any of you all who are listening, who are watching, I'm sure a lot of y'all have 401k plans. And many of you all have had an appointment with your 401k sponsor or provider. They're important to go to. I see a lot of people skip over them, but those meetings, that's where your market provider or your 401k provider helps you determine what your good asset allocation is. And this way, it's which funds should I get? Because each one of the funds usually is supposed to focus on a particular asset class. There's some blending in there. There's some mixing and matching in there. But for the most part, that's where you're supposed to get help with determining your asset allocation for your 401k, 403b, 457 plan, TSP plan, any of the like. So keep that in mind. And so just a few more points, y'all, and then we'll open it up for questions. And I see we already got a couple questions out the gate. So as you think about this, right, going back to retirement, think about when you need your money. Think about how you want your money. Think about, are you okay when the market is up? Do you get excited? Are you okay when the market drops? The stock market, that is. When you see it drop tremendously, how are you feeling? What are your feelings like? Right? Because you can say, yeah, just throw it all against the wall. I want to try to make as much money as possible. But when you lose, is your stomach topsy-turvy? Right? Are you ready to throw up? Do you have knots in your stomach? Can you not bear it? Can you not stand it? Is it really hard for you? And so if that is the case, you want to think about maybe being a little bit more conservative, because the more conservative you are, the smoother the returns are. right? The smoother you will see your portfolio value go. It won't go up high a whole lot. It won't go down a whole lot. Right now, if you are really aggressive, like really aggressive, then you'll see your market, you'll see your stock portfolio, your portfolio overall, the value of it go up, up, up. Then it might crash and go down, 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 and go up, up, up. If you're really, really conservative, it's smooth and maybe a little bit of growth, hardly no growth. But you had to figure out how you best like it, how you best like it, how you best want it, right? Some people are runners, some people are sprinters, some people are marathoners, right? So you have to figure out where you fit in and how it works, So we'll definitely talk about that more next week as well. And we'll talk about different applications and different examples of how colleges do it, like Harvard and Yale, both have over $1 billion under management. And they manage their way a certain kind of way. Now, I know things have been easy, right? Things have been easy as this bear market has been away. You guys made money. But I'm going to tell you, everybody makes money in a bear market. Everybody is a superstar in a bear market. But now everybody's a superstar when the bull market is here. Okay, correction. Everybody is a superstar when the bull market is here. But when the bear market is here, that's where you see who really is worth their salt. So a lot of these quote unquote stock market gurus, cryptocurrency gurus, just overall investment gurus, even some of the real estate gurus, as times get a little rougher, you're really going to see who's really worth their salt. Just keep that in mind, y'all. Keep that in mind. Remember, I told you that. Remember, I told you that. All right, so let's get into some of these questions. I gotta respect the super chat. DC gave me the super chat off top, $2 super chat. Thank you, sir. Appreciate you for the super chat. So DC asks, what's a good percentage for crypto in your overall asset allocation? It depends. I would say anywhere from 2 to 5%, depending on how much money you have. Again, I'm going to say this because I get a lot of people that ask me this question. If you don't have any savings or little savings, don't throw all your money into crypto. That's not me being a crypto hater. That's me being crypto pragmatic, because crypto is very volatile. Your savings is your savings. And one of the things I need to do is go over the asset allocation or the asset class hierarchy, right? So at the very base of that, let me see if I can find it real quick. I know I've talked about this before. At the very base of that, though, is cash. Right? Why? Because it's almost impossible to lose cash. And yeah, I know somebody is going to say, but inflation eats up cash every year. Sure, it does. But here's the thing. When your roof falls in, car breaks down, baby mama wants some extra money from you, baby daddy is trying to convince you to flip their tax refund. If you have some cash already set to the side, you can handle those things real quick. It's not even a problem. Not even a problem. All right. And it's often good to be able to pull cash when you need it right away. The problem is if you have all of your assets locked up into an investment and you need cash, again, baby mama, baby daddy, or your baby mama is trying to flip your tax refund, roof falls in, car breaks down, you might have to sell out your investment prematurely. What do I mean by premature? Well, before it got to the goal in which you intended it to be. For example, maybe you bought a stock and you were expecting it to go up 50%. It's only up 10% now, but you got to cash out and you got to give up your money. So now you just lost all that potential. That's one of the biggest wealth killers too, because people don't understand asset allocation. But you had to then take all your investment money, give it to whoever for whatever reason, and now it's gone. Had you had some cash on the side, you were like, here, this is what I got. This is what we're doing with it. Go on about your business. My investments are mine. Can't touch them. But you got to have that saver's mindset in order to do that. Right? So again, everything is relative. You got to put everything in perspective. So when people say cash is trash, they have absolutely no idea what they're talking about. They have absolutely no idea what financial planning is. They have absolutely no idea what risk management is. There's a reason why Warren Buffett has a whole bunch of cash on the books. And yeah, he has some special things that are jumping off, but there's a reason why he has a whole lot of cash and keeps a whole lot of cash. Cash is king. Never forget that. Never forget that. All right. Let's see. So Miss Edith is here. And so I was looking for asset allocation, asset class, because I really want to show that to y'all. I probably should start doing this almost every episode. Because I know we forget. Sometimes. And I get it. So let's see. Let's see if I can find it. Margarita Forever, Mrs. Empowerment 21, Key to the Coins. Is that Malika? If I'm saying your name wrong, I apologize. So I'm trying to find a good asset allocation or a good asset class pyramid for y'all to look at. Because this is the thing I never see anybody talking about. And it drives me crazy. So let's see. Let's see here. I'm having a hard time finding a good one that I can share. Let's see here. And all of them are, I need to create one actually. I need to create one. Okay, Investopedia has one. Let's see if it can open up to a good website. So if any of you all have a chance, look up the investment pyramid or asset class pyramid. And so it basically talks about investments from low risk to high risk. Anything you're doing with investments, you got to think about risk. The best investors are also the best risk managers. Never forget that. All right, so pulling this up on the screen now. All right, so I found one that's pretty good. Hopefully you all can see it. That doesn't look that great. Let me blow that up. So let's see here. Can everybody see that? Put a 1 in the chat if you can see it. This is over on Investopedia though, so everybody can find it, right? So when you look at the very base of this pyramid, right? This is how people should be thinking about their money. At the very bottom of the base is cash equivalents, CDs, notes, bills, money markets, bank accounts, government bonds, and debt. The reason, again, the government bonds and debt is because typically your U.S. government bonds, your corporations are not going to default. They usually have pretty good credit ratings, so they're not going to default. Money markets, bank accounts, typically not going to default, right? Cash, whether it's in your shoebox, right, under your mattress, unless you get robbed by the doughboys, you should be pretty cool, but we do know there's a high risk of being potentially robbed by the doughboys, right? So that's something you want to think about. But when building out your portfolio, you want to think about all my needs. Do I need money for milk? Do I need money for gas? Do I need money to pay my bills? Do I need money for various things? And you got to think about all those things when you're putting together a portfolio, right? So some people just want to say, I'm going to throw it all at the wall. I'm going to risk it all. It's not a good strategy because, again, one thing that you didn't expect, and what's Murphy Law say? Oh man, I can't think of what Murphy Law. Somebody tell me what Murphy Law says. Look up Murphy's Law. What will happen can happen, or something like that. Right, what will happen can happen, something along those lines, right? But the unexpected things will come about and they will mess up your investments. All right. So then when we go up the rung from low risk to kind of mid risk, you have real estate, equity mutual funds. I hate mutual funds for the record, but this is just for illustration purposes. Large small cap stocks, high income bonds / debt. High income bonds typically are junk bonds, like I was talking about before. Then you go up a step further. You have options, futures, collectibles, and I would say crypto as well. But again, think about it. The base of a pyramid. What is the base of a pyramid? It's the foundation, right? It's what you need for your pyramid to secure and be pretty stable. And if you look at the test of time, those Africans knew what they were doing when he built those pyramids. Money is very much the same way. Now, you can kind of play around with some of the stuff and go, certain leverages, certain percentages higher, maybe certain percentages low. But a great savings account will save your ass in the time when you're not expecting it. I'll just say that. All right. But I want y'all to keep that in mind. I want y'all to do some homework and go look up investment pyramid. Do me a favor. Somebody put in the chat investment pyramid. That's homework. I want y'all to look that up and start to think about it. So when you start seeing some of these so-called highfalutin gurus that out here that just got on the scene and saying, I'm an investment guru right now, look and see what they're talking about. Are they ever talking about any fundamentals? I want y'all to think about this, and this is no shade to anybody. The reason why a lot of y'all here is because y'all don't have any guidance. Y'all don't have anywhere to go. If somebody has money, a lot of times they have access to advisors because they have the money to pay for them, right? So I want y'all to think about that. A lot of these people that these folks are following are not people of means. These are people that are chasing lottery tickets, sadly. And so to tell people to just go for it all, put all their money on black or on red and just spin the wheel, to me is very irresponsible. But I'm going to get off my soapbox because that's not what I'm here for tonight. That's not what I'm not here for tonight, even though somehow I always wind up on my soapbox. All right. I know we got a couple more questions. IG, I'm coming to y'all in a minute. All right, Jose's in the building. So Jose says, I'm considering getting some New York municipal bonds so I can have the city pay me while I'm a resident. Learning about bonds. Hayden, don't take it off while I read it, brother. Learning about bonds in the class this week. All right, so yeah, I don't think that's a bad idea, Jose. New York municipal bonds. What is a municipal bond? A municipal bond is a bond. What is a bond, right? A bond usually is when you're loaning somebody or something some money, and the way they pay it back is usually through interest, right? They pay it back through interest, and then after you might have a bond for a certain period of time, a certain term, from let's say a year, 3 months, 10 years, 20 years, they have to return back all your principal, right? Think about it kind of like a reverse mortgage. And actually, I shouldn't say that because that's a product in of itself. But think about a mortgage, because a mortgage is a loan lending instrument, right? Somebody got a loan, they got some money, and they're paying it all back. So instead of them giving you the money for the mortgage, you are giving them money so they can operate their government, pave roads, pay for police, pay for firemen, pay for schools, pay for books, things like that. That's what they use a lot of these bonds for. Sometimes they pay for airports, things like that. Municipal bonds usually don't default. There are some cases where they do. They usually don't default. And the interest that's paid out on them is federal income tax free. However, if you sell them, they are subject to federal corporate gains tax. All right. So keep that in mind. They are subject to federal cap gains tax. All right. So keep that in mind, y'all. Keep that in mind. And so, Jose, I think, again, it's good. They're almost like cash. They're not cash, but they're almost like cash. And so that's a great way to put some money. Here's a quick tip for y'all. Y'all probably see some of these people talk about how to retire without paying taxes. Well, the key is a lot of people are putting money in municipal bonds. If you get some good municipal bonds, you really hit the jackpot. they don't pay the greatest. They don't pay the greatest return though. They don't pay the highest return. But that's not really what they're there for. But it's tax free. And so if you can look at the tax-free return versus, not getting, because again, muni bonds typically have a lower rate of return, a lower yield, but you don't pay any tax on them, no federal income tax on them. So if you can look at that, especially if you're in a high tax bracket and every dollar you get is getting taxed, every dollar you get, you got to pay 37 cents on, it might make sense to put some money into a muni bond or municipal bonds. The business accountant, how are you, lady? Welcome, welcome, welcome. Fly Girl 1908, welcome, welcome, welcome. Not Queen 23, how are you? How are you? Miss Edie's over on IG Land as well. And Malika says, thanks for taking us back to the basics. Yeah, listen. Hey, Evelyn, how are you? And Ash is winning. How are you? How are you? How are you? Listen, the basics. The reason Michael Jordan is a great, he had great basics. The reason Magic Johnson is a great, he had great basics. The reason Kobe Bryant is a great or was a great is because he had great basics. Yeah, he could soar and fly and dunk and shoot threes, but what else could they do? They could dribble, they could pass, they could shoot a layup, they could shoot a 5-10 foot jump shot. All basics. All basics. Any beginner Pee-wee basketball coach is going to want you to do. Again, the dunks are great. I know what my basketball coach said. Dunks are great. How much are they worth? 2 points, coach. Coach Will was his name. Says, all right, well, if you stand right here and just hit the ball off the backboard, what's it worth? 2 points. So why are we trying to do all the major theatrics and look pretty and fly? Just get the bucket, get back on defense. But, nobody wants to talk about that. Naisha, how are you? Welcome, welcome, welcome. K. Marie, how are you? Welcome, welcome, welcome. Listen, if you all are not familiar with me, don't know me from a can of paint, I'm Kamari Ellis. I'm the host of the Finance Rebel Show. We do Wealthy Wednesdays every Wednesday at 8 p.m., where we talk about a topic and I answer your money questions here live on the spot. I might be able to Google a couple things here and there, but mostly everything's on the spot. So I might stumble or stutter across a couple words because I'm pulling everything from memory for the most part. Listen, if you know anyone who wants to up-level their finances, get a better understanding of finances, share this out with them. Now, I've been trying something out on my YouTube. And I want y'all input on it. I don't know if you've seen it at all, but I've been trying out different daily videos talking about investments, of course, talking about finance and investments. And I don't know if y'all seen it. I'm kind of playing around with it, calling it the daily number. So every day I find some topics that I want to talk about. That's a terrible picture. I find some topics that I want to talk about, and I just go about talking about them. So I started it last Friday, and it seems like it's starting to grow. So last week I talked about the Russian ruble. But yesterday I talked about the Russian ruble. I talked about the Republicans' plan to increase taxes on the poor and middle class. Talked about the new Supreme Court justice. That was last Friday when that was announced. And today I talked about sky high wheat prices. So do me a favor, jump on over to YouTube, check it out. Tell me what you think. Tell me if it sucks. Tell me if it's okay. Tell me if it's good. Let me know. Give me some feedback. Can y'all do that? Put a 1 in the chat if y'all can help me out with that. All right. So I see a question. All right. So let me, hit that. Here we go. All right. So over on IG Land, okay. I want to say your name right. I believe it's Malika. It says, how do you know when you're ready to move up the investment pyramid? When should you consider it? So it's not a stagnant thing. It's not a 1-2 thing. It's almost like when a baby is ready to walk. When is a baby ready to walk? Well, when the baby stops crawling and when they can pull themselves up. Like, it's kind of one of those things when you know. But I can give you some guidelines, right? When you hear some people say, how much money should you have in cash or have in savings? Everybody says 3 to 5 months or 3 to 6 months in expenses. If you've been watching and listening to the Finance Rebel Show, I say no. I say you need to have a year's worth of income in your savings. Why, Kamari? Why do you say that? That's crazy. That's a lot of money. So first of all, it is a lot of money, but it's also a benchmark. Start with $100, start with $5, start with $1,000, and just start working your way up. But that is the goal. You want to be liquid. There is power and liquidity. There is power and liquidity. Why? Because cash is king. These couple times where the markets fell, people were able to go shopping because they have the cash readily available to them. But again, to go back to answer your question, when do you know? So when you have a good savings habit, right? When you have a good savings habit, when you're investing, I don't know if you have a 401k or I don't know if you have a job or a business, are you investing in your 401k? Are you maxing that out? Are you looking at Roth IRAs? Are you maxing those out? Are you looking at, again, your savings? Are you maxing that out? Right? You know, some of those things you should be looking at to see, what am I doing? Am I saddled with debt? Hopefully you aren't, right? But sadly, a lot of people are saddled with debt. Again, we got a lot of these folks running around talking about you need business credit to do a business, but never say, hey, how about you learn how to do business? How about you learn what revenue is and what a profit and loss statement is and what a balance sheet is, and like learn some of the basics. I don't know if y'all notice this. If y'all been rocking with me for a while, I always wind up going back to the basics. And ironically, it seems like the thing that people don't want to do is the basics. But that's the thing most people should do. Stick with the basics. Stick with the basics. But the basics aren't fun. The basics aren't sexy. All right, you gave me the pronunciation. Now, y'all putting me to the test to see if I ever watched or looked at Hooked on Phonics. So it's Maleka or Maleka. All right. I think I got it. All right, so we got a couple of ones in here. All right, so Katie Corns said one. Evelyn said one. All right. Eno 272. How are you? Welcome. All right, so if this stuff is making sense, just let me know. Put a one in the chat, y'all. All right. So, it just takes time. But once you really get on your journey, you're on your journey. And nobody can take you off. All right. Okay, MD says it's logged off into a different Google account. Listen, what is your feeling on futures-based stocks? And or is that and or options as a hedge against the decline of tech stocks? I don't think there's anything wrong. Listen, there's no such thing as a bad financial tool. There's bad financial strategy, right? Bad financial timing, which goes back to bad financial strategy. But listen, I mean, I've talked about it a couple of times, but I made some money in some leaps. I am not the options king. I never will claim to be. There's definitely there are many other people much better at options than I am, but I don't think there's anything wrong with using options as a hedge. Matter of fact, that's what they're made for. There's nothing wrong with using futures as a hedge. Matter of fact, that's what they're made for. All those derivatives are made as hedging. The problem, or hedging products, the problem is a lot of people like to use them and don't even understand what the market's doing. Well, Michael, I know you have a pretty good understanding, but I don't think there's anything wrong with it. I was talking to a good friend of mine who's also a tax accountant, and they were mad because some of their options expired and the stock ran up. Like with that's part of the game. So that's the thing, is you got to learn the rules of the game. You really got to learn the rules of the game so we can truly understand the game. All right. I said tonight was going to be quick, but not quick. Hey, Midnight, how are you? Thank you. Mike Tauber says, good evening, brother. Good to see you all. Good to see you all. Good to be seen, right? It could always be worse. Northern Bell. Hey, lady, how you doing? Northern Bell, you becoming a regular. Thank you. I appreciate you. All right. MD Tillman says, besides Xerox and Merck, do you know how many other Fortune 500s that are being run by black men/women? I don't think there's any. I feel like Merck, I think his name was Franklin something. I feel like he stepped down. Ursula Burns was at Merck. She stepped down about 2 years ago. So Xerox isn't being run by a black woman anymore. And Ursula Burns has an awesome story, by the way. Y'all should all go check it out. I just got finished reading her autobiography. And Merck, I don't think Merck has a black CEO. Some Frazier. Like in Frazier. And I think, yeah, he stepped down, right? So Robert M. Davis, just to show y'all, now pulling this out my caboose, Robert M. Davis is there we go, is the current, you can't see that, that's too light, is the current CEO. Robert M. Davis, he took over July 1st, 2021. All right, thank you for the YouTube follow. And yeah, check out my daily videos as well. Let me know what you think. Brown Buddha Bay, how are you? Lady T. Williams, how are you? Welcome. Kits Zeta. I know who you are. I can never say your screen name. All right, so yeah, that's gone. There isn't really any black representation in the C-suite in the Fortune 500. And so that's why I always joke. Well, not joke, I'm actually serious. When you have all these companies talking about some Black Lives Matter, and they want to give some money, and that's cool, but they don't have anybody in the C-suite. And it's like, oh, okay. How serious are you really? I don't think they are. So, you got to keep that all in mind, y'all. All right, Thunder says, I heard POTUS mention Ford and the Gov investing in this company for electronic vehicles and getting the American public to buy American to help build up the nations back up. Yes, yep. He's been talking about Ford. It's funny that your boy Elon was a little butthurt because Joe Beasy said he mentioned Ford, he mentioned GM, he did not mention Tesla. And so, matter of fact, let me see if I can find that tweet. Because he was hurt. He was like, Tesla has done way more. Kind of like the spoiled child. Always wanting to be recognized. Always wanting to be all up in the video. Always wanting to be all seen. So, but you get it. Funny enough, life gives all types. Let's see if I can find it. Let's see. Give me 1 second. If you have any questions, go ahead and throw them in the chat. So thank you for that, DC. Another $2 super chat. Appreciate you. So all right, so let me go back to one thing. I'll come right back to that. Because sometimes when you're running the board, you get a little distracted. I gotta stay focused. So let's see here. I don't like how that looks. So this Benzaga highlighted this. This is a tweet from Joe Biden. I don't know if everybody can see it. Everybody, let me know if you can see this. Joe Biden says Ford is investing $11 billion to build electric vehicles, creating 11,000 jobs across the country. GM is making the largest investment in its history, $7 billion, to build electric vehicles, creating 4,000 jobs in Michigan. All right, and so like I said, and this was yesterday. No, this was today, March 2nd. This must have been early. Then Elon had to insert himself in the conversation, like, hey, nobody's talking about me. Why isn't anybody talking about me? I want to be seen too. I'm doing stuff that matters as well. Tesla has created over 50,000 U.S. jobs building electronic vehicles and is investing more than double GM plus Ford combined. FYI, 2-person controlling this Twitter. So petty. So petty. But, I will say that sometimes you do have to fight to get your recognition. Many times people want to be seen. And of course, if we go back and look at this, all of the constituents from the Church of Elon have said, hey, go Elon, go. Go Elon, go. We love you, Elon Musk. We love you. We love you. So, Elon's got his whole team. They all got pom-poms and skirts on over there cheering for him. All right, so DCS, our target funds good for 401k allocations. So that's a yes and no question or answer. The reason why I say yes and no is because target date funds are good. They have pretty good asset allocations. By the way, if you want to see asset allocation at work, you can look at some of the target date funds and target date ETFs. Just look at them. You don't got to invest into them. But they tend to be a little expensive. All right, they tend to be a little expensive. But if you want a done-for-you service, target date funds work. They work just fine, but you're going to pay a little bit more. You're going to pay a little bit more. All right. Jerry, how are you, Jerry? Jerry, thank you, Jerry. Jerry has been watching and commenting all the videos on YouTube daily. So I appreciate you, Jerry. And again, I appreciate you. And Jerry also is pretty good for some super chats as well as we go on. All right, so people are paying attention, getting something from this. Jose's getting something from it. MD Tillman, DC. All right, so I appreciate y'all. Cut out McDee's and you'll find all kinds of money, trust me. Oh, yes, that's a fact. So what Thunder is saying is, if you cut out McDonald's and really all the extras that you're spending money on, you can find extra money for your investments, for your savings, for anything else that you want to do. People often say they don't have money. I say, give me your bank account in about an hour and I can find all kind of money for you. I haven't been proven wrong yet. All right, Jose says, dang, I skipped the whole foundation and went straight to middle section and only have stocks. LOL. Do I have a money market account though? So, all right, so here's the thing. Jose is referencing the investment pyramid. So remember, I also said time horizon is probably the most important thing when it comes to investing, right? Time horizon. When do you need the money? When do you need to turn those investments into cold hard cash so you can pay for your electric bill, put some bacon on the table, buy your boo thing as something a little special for a birthday or his birthday or their birthday, because I know people are very fluid nowadays. I'm not trying to get in trouble. But, at some point you're going to need that money. But here's the thing. Let's say it's for retirement. I know Jose is a young guy. I've talked to Jose on Zoom. I haven't met him in person yet, but he's a young guy. He could weather many market crashes. And on average, right, average doesn't mean that it happens all the time, but on average, the stock market goes up anywhere from 7 to, let's say, 12% a year. I think it's closer to 7 to 8% a year. So if he has another 20 years, 30 years to go before he retires, he can afford to skip the base section when it comes to his retirement. But I was talking about overall asset allocation, right? What's in your savings? What's in your retirement account? What's in your what I call your future wealth fund, right? Your goals and aspirations fund. What's it look like? But if he's talking about his 401k, you don't necessarily need to have cash and CDs and money markets in your 401k right now, as long as you have cash and other things on the side somewhere. But again, that's more of a 201, 301 type thing. But again, you can do it. You can do it. All righty. Let me take this down. Remember, investment time frame is important, y'all. When do you need your money? Chad Jones, investment pyramid. All right. Thank you. Look that up. Or asset class pyramid. That is fine. Miss Edith is sharing and liking. You're being a great citizen. Thank you, thank you, thank you. All right, and I haven't forgotten about the investment club. All right, that is still on deck. I think it's about 20 of you all that said you want to do it. We're going to do it. Just putting some things together. Like I said, there will be a charge, right? Got to make sure we weed out those who just want to ride along, take a ride, and don't want to do the work. Nothing crazy, though. Nothing crazy. All right, Thunder's got a question. Don't forget, it's income tax season. It's that time of year to get paper savings bonds. Yeah, but you know what? Thunder, again, I can't thank Thunder enough because Thunder gave me the idea for doing the one video about 3 ideas for increasing your savings account, something like that. But I-bonds was one of them. So you don't have to get them paper. You can get them electronic. If you want to get them paper too, that's cool. But you have options. And I think right now, while inflation's up, now's the time to buy I-bonds, savings bonds from the government. All right. So he said, just to read the whole thing. Now, you put question there. It doesn't look like it's a question, Thunder. It looks like it's a statement. Don't forget, it's income tax season. It's a time of year to get paper savings bonds. You can only get them when you pay for your taxes to be done. You can't get it if they take the fee out of the return. Yeah, and don't let people take the fee out of your return. That leads to so many other things. I know some of my tax bros who probably watch me don't like that, but I said it. Yes, thank you for helping me with the algorithm. Thank you. Now remember, the algorithm is against me, y'all. So I'm talking to y'all about the basics of investments, nothing flashy. So it's not sexy per se, right? But if you really get down to it, these are the things a lot of y'all really need. So please help me get the word out. Like, comment, share, subscribe to the channel. You can find me at the Finance Rebel everywhere. All right, so Thunder, all right, now is asking, if you do your own taxes, it's form, okay, he's talking about it's form 88888 to get Series I. Can you check and make sure it's still form 8888? I believe you. I would have to go into the tax return to figure that out. But I believe you. You can do it, and you can check out the box. And so, but what Thunder's also putting up there, y'all, is that a lot of y'all get y'all tax return. A lot of y'all get y'all tax return, and first thing y'all do is y'all go shopping. Now, I understand it because I've been in a position before. Sometimes that tax return will bail you out, will save your life. For a lot of people, they use their tax refund as a form of savings. They let the government hold their money all year long. The government don't pay them no money. They get to use your money interest-free, and then they'll give you a refund at the end of the year, potentially, allegedly, right? But what Thunder's saying is, boom, if that is the case, make sure you take those funds and utilize them for the good and not just keep going along the same cycle. Big problem with the wealth problem here, with the wealth gap here in the United States with Black folks is a lot of us are stuck in a cycle and we haven't figured out how to break the cycle. Sometimes it takes a little thing. It's not even a major thing. Buy some investment bonds or some savings bonds. I co-sign that all day long. Thank you, Thunder. All right, Samuel's here. Thank you. He gets me one. He's getting value from this. Thank you. DC's here. He's getting value from this. Blessed Case here, getting value. Midnight Green is getting value. All right. Midnight Green says, do you think it's valuable to purchase precious metals? Sometimes. If I have my homeboy Jimmy from By the Hood on there, y'all make sure y'all check out their podcast, By the Hood. He's going to say absolutely. And then he probably would hit the give me the air horn effect, right? I like precious metals as an idea. I'm kind of agnostic, meaning I don't have a whole lot of feelings about many of the investments. I just want what's going to work. And so a lot of people love them. I'm not a gold bug because a lot of people love the gold coins. Some of them are cool. Some of them look good too. What I think they call numismatics. I might be saying it wrong, but when you look at them and some of the precious metals, especially some of the gold and silver, Many people like those because you're able to not only benefit from the rise in gold. Gold and silver has been on the rise, by the way, side note, but then the coin also has a certain value as well. So it's like two different factors. So yeah, I mean, a lot of people like precious metals. All right, Jose said the basics or fundamentals aren't sexy, but they are key. Preach on, brother. All right, that's a fact. All right, so Jose got a 1, Thunder 1, Northern Bell 1. Everybody's getting value. All right, great. All right, Sherry is being a great citizen. You know what? I think we're going to start calling y'all Klansmen and women, because I think we're going to call the investment club the Rebel Clan or something like that. I haven't totally worked it out, but y'all tell me what y'all think about that, the Rebel Clan. But Jerry came through with the $5 super chat. Appreciate you. Gotta give you. Appreciate you for that. Oh, Thunder came through. Thunder's coming through heavy too. Thank you, y'all. Appreciate y'all. All right. I had brought a bunch of Ford back when it was less than $5. Smart man right there. I'm not shoot. My basis isn't even that good, right? I got around 6 or 7. So you killing the game. All right, bless K. Appreciate you. Appreciate you so much. All right, Jerry. Thank you, sir. Thank you for being a good Klansman. I appreciate that, right? Because again, like I said, Jerry goes onto the YouTube channel, comments on all the stuff, right? Comments matter, y'all. The YouTube algorithm does see the comments. The comments do trigger the algorithm to let it does trigger the algorithm. Comments triggers the algorithm to let them know that people want more. They want more. All right, so Northern Bell gives the fire sign. I'm just seeing your comment here. Hey, no worries. It's all good. All right. And Cherie, hey, one of the fearless leaders of the 10K project. How are you? So glad you're doing this project. We'll listen to the replay. All right, cool. Let me know what you think. Yes, take your tax return and shop for assets. Yep, that's a good way to go. DeBress is joined over on IG. Shivani, I hope I'm saying your name right. Welcome on IG. Big Papa Smurf. That's funny. Big Papa Smurf over on the IG. All right, and so Thunder says, and if it's any consolation, MLK is on the $100 Series I paper bond. You know what? That's facts right there. And yes, it will be kind of cool to have a couple of those laying around the house just to show your kids. Numismatic. Yeah, I always say it wrong, so thank you. Numismatic is what the people who study, or the science of study precious metals. Hey, Robbie. How you doing, lady? Welcome. All right. AD Tilbert says, don't nobody want nothing old but gold. I like that. All right. Northern Bell says, love it. All right. So glad y'all appreciate it. So keep in mind, y'all, things are going to be crazy, but the basics, the fundamentals always bear out, no matter the market storm, no matter the market weather. Cash will always be here. Again, like I said before, a lot of people say cash is trash, but at the end of the day, you always need cash, either to pay a credit card bill or to buy assets, one or the other, right? And guess what? If you have cash, you're able to utilize your cash to get cheaper assets because you have more leverage when you have cash. So just keep that in mind, y'all. Keep that in mind. Why do people like fast things? But it usually takes you more time to accumulate it. Just think about that. Everybody's running around trying to get fast money. But when it's time to make moves, They want the liquid cash. So keep that in mind, y'all. Keep that in mind. Don't just go along and get along. Don't just, go along with certain things that don't make sense. And there's a lot of things that don't make sense because there's a lot of people talking about stuff that they don't have the education, the experience to talk about. Basically, they are not qualified. They're not qualified to talk about them, but they talk about them anyway. And I'll tell you what, some of these guys and gals are great salespeople, straight marketers, great marketers. And so they make a thing sound sexy. I don't know if, I guess I can't talk about this guy anymore. I'm going to talk about it anyway. Anybody remember when Heathcliff Huxtable met Alvin for the first time when Denise brought Alvin home? And he said to her, she's presenting you like a great steak on a trash can. And so a lot of these great marketers are able to present trash in a great fashion, make it look sexy, and people are buying it. But at the end of the day, it's still trash. So just keep that in mind as we go forward. So listen, y'all, I've been rocking with y'all for a minute. Y'all know I got to get to my vittles. It's about that time. But I've been working to put up more content, educate more, help more people out by doing these dailies. So do me a favor, go over to the YouTube channel, subscribe to the YouTube channel, and comment on some of the things. And if you have any topics that you want me to cover, just inbox me or send me a text over in the text community. Oh, and nobody told me what they thought about the investment club name, Rebel Clan. Tell me what y'all think. All right, but you can call me or text me at 215-974-0058. Again, 215-974-0058. All right, folks. So until the next time, I will see y'all, and I'm sure I will be doing my daily videos on YouTube. Okay, wait a minute. Can't go yet. I said it wrong. All right. I said it wrong. Miss Edith says that was the episode with Vanessa Heathcliff. Asked, what is your favorite meal? Fiance said steak. And he said, how would you like it presented in a trash can? Right. All right. I got it. Y'all got the idea though, right? I got the episode. I got the daughters wrong. Hey, Allison says she's late. No problems. Here now. Watch the replay. Tell me if you got any questions. Be more than happy to answer them. All right, Ms. Edith says she loves the name for the investment club, and she says thanks. All right. Well, supporting me is supporting you. I believe in community and reciprocity. All right. So listen, y'all all have a great night. Do y'all study and don't forget to be great. Later, y'all. Y'all have a great one.